Welcome to this small series called How to Read Price. Now, reading price of the monthly time frame is quite easy because it takes quite a long time for any kind of new information to form in price. Essentially, one monthly candlestick, um, exactly that 30 days or somewhere around that. And so if you notice on my levels that I have here currently that there's been no change ever since the last time that I posted my review, even on the public telegram channel, right? Although at the point I did not draw a conclusive statement, right? I gave both scenarios why it would go down and why it would go up. And this is exactly what is still on here. See the reason for going down, bearish order flow, and the bearish and actual drawn liquidity down below here. Now reason to go a little higher would be like a fair value gap in this one. But in any case, okay, so what we have this fair value gap that we're currently in, and from what we have learned, you know that the relevant levels in a fair value gap are these three, right? Open, consequent encroachment, and the low. And then this here would be like the all-time low. All right, and yeah, well, down below here, but it's not relevant right now. And well, yeah, so if you see this candlestick here, I think it's quite significant the fact that price actually to guard is high and then to guard is low. That means we have a daily range. Okay, so price should soon enough choose whether it's gonna go higher or it's gonna continue going lower. In any case, there's not much here on the monthly time frame. Essentially, when you're looking into future price action that you can get essentially from the information that you already have here. There's not much more you can go beyond, or you can know beyond what you have already here. But the purpose for this is to show you how to read price on the monthly. Okay, how to read price on the monthly chart. Now I feel like it's an incredible advantage to be able to read high time frame price charts, because this is where you get the true direction of price, true direction of the market, whatever market it is you're trading. And very few people actually do this successfully and consistently. You see, it's not in their systems, and it's usually even not part of their thinking when they're analyzing price. You tell someone to analyze something for you, they're more likely to immediately go for intraday charts. You ask someone for their bias, again, they're more likely to go for intraday charts, or most likely will end on that daily as their higher time frame, or as their highest time frames. And a lot of people are not actually used to the idea of monthly time frame. I remember there was a time I did not even consider it a worthy time frame. I felt like I had a choice. I felt like I could simply not bother with the monthly time frame. There was a point, I think, possibly like for over a year or two, I had no interaction with the monthly chart, because simply nothing much was happening. Right, this was way back, I think, when price was around this areas here, or somewhere there, back when I was starting. Okay, I'm going to take you through something here. You see, this is like the lowest low. This is like the second month of the price, or after the began, right? So it's like creates low, start to go high. So this is like an order block. See how price taps into that order block, buys from there, and an expansion, so like a displacement, because we see how price leaves imbalances right here, and then another expansion here, leaving an imbalance. First thing price does when you trace this down is to retrace to this fair value gap, right? So you see, simply enough, that price respects the fair value gap, continues expanding higher, and this candlestick closes above this one becomes an order block. An order block, you know, the relevant levels is the high, the open, and the mean threshold, 50% of that. Okay, and well, I guess there was a bit of a fair value gap here, but in any case, you see how price find support on that order block, because now we have like bearish order flow, right? Price is bearish, it supports price on the order block, and price plays around for those couple of months, right? As we see with those massive wicks, but remind you that an order block to be an order block, price has to close above it with the body. So this down candlestick here only becomes an order block when this candlestick closes above it. And so what happened is, at this point here, it opens, goes lower, taps into that order block, and then expands higher. And so by closing above, this will be now your propulsion block. And so later on, when you have a retracement after taking out a high, trades down to this propulsion block, price buys from there, right? You're noticing something, right? More displacements, leaving imbalances in price. Later on, where we see a retracement down, mind you, at this point at all of these points in times, this is like the all-time high for the asset, okay? Because, well, it is fairly new and there was no past history, so trades an all-time high, trades it down, right, to a fair bit of gap right there, and see some more expansion to create the new all-time high. Later on, when price retraces down, so now, okay, we see bearish price action. See bearish. Notice all along when price is going up, this is what's gonna happen in the bullish order flow, right? You're gonna see more up candles than down candles, and big, large range up candles, while small range down candlesticks. In any case, now here you're seeing large down candlesticks, and so in a way, because in a way you're moving from extra range liquidity to inside range liquidity, what we should see is the nearest one. Well, if you look at this low here, it's not just the intermediate time low, it's a swing low, right? Remember when we spoke about all highs and all lows, the significant ones, or what we mean by that is that swing highs and swing lows, right? The old swing highs and swing low, not just like an old high and old low. And essentially, when you're looking at a monthly time frame, or monthly candlesticks like this, like highs and lows of the candlesticks is not that relevant, even though it's previous monthly highs and lows. They're only relevant, or they're only more significant when you're looking at them on a lower time frame, like weekly and monthly and daily. But when you're looking at this monthly chart, liquidity primarily, okay, where you're gonna see a lot of liquidity resting is gonna be at those swing highs and swing lows. So you swing low at this, and then see price even reaching even down lower to where there is another fair value gap right there. And that's where boom, see now price start to go seek for higher prices. And so this retracement down here, there was, if you remember, there's a daily order block right there. That's where we see an expansion price going up higher now. Now here, because this candlestick closes above this one, right? See how price traces down into this order block right here. Now again, if you remember on the daily chart, the daily structure, that expansion from the daily order block here, there was a lot of displacement, a lot of imbalances in price on the daily time frame. Hence, as we spoke before, that when there's imbalances in the wick, price doesn't need to touch or can react to that weak part of the order block. It doesn't need to reach all the way to the open, and that's what price does, all the way reaching out for that external range liquidity. See how it's a swing high. Remember, the swing high is a 3 candle pattern: 1, 2, 3. Buy side liquidity rising above that, and also the fact that it's like a half of 2020 something, the half 2021, I believe. And as you know, this one is a swing low, right? 1, 2, 3, and you can continue like this. You see here, start to see massive displacements. That's like a shift in structure on a different time frame. See how this up candlestick is. This is the last one before we took out that liquidity over there. It becomes like a bearish order block when we close below it, and boom, the retracement up all the way to it, and that's the price also from there. Now this will be a propulsion block. So you're noticing on the daily, on the monthly time frame right now, you should be noticing that it seems that comprehending or understanding what price is doing is easy, or at least I can say the structure on this monthly time frame is quite clean. That's what I'm looking for. It's quite clean. There is no surprises whatsoever. We started here, we went all the way up there, up to the highest high, and we're somewhere around here. Even now, I already spoke about this and all that good stuff until price reaches over here, right? There is no well, how do I say it? Oh yeah, it's quite clean, right? Now, as I said before, you use the high time frames to, or they give you the true direction. So I like to say a much clearer or true to life direction. You see, price will move in the direction of the highest time frame order flow. The lower time frame will have to be in alignment with that. Okay, we have to conform to the structure or to the direction that you get on the high time frame. So it's imperative that you understand, that you know, that you learn how to interpret price on the high time frames. So now I may have to repeat myself that there's not a lot of changes that occurs in a short period of time on the, especially on the monthly, right? Because we just reviewed like 5 years of price action so far. It may look like something we did in a few short seconds, but it took 5 years for all of this to form, right? 5 years. This puts you at a unique advantage if you can just get just one monthly move right. Okay, now you may not be a long-term trader, but even if you're short-term trader, you still need the high time frame direction in order to be right about your short-term one, essentially, to have like higher odds, okay, of being right. You need the higher time frames. And so imagine this. Imagine the key points, the key areas. Essentially, what we just did actually, we just looked at like the PD arrays, right? We just looked at the PD arrays on the monthly and the way the price reacts to them. And you notice that we have applied all that we learned about each PD array on this structure, right? With regards to the fair value gap, the relevant levels in the fair value gap order block, the relevant levels in an order block inside the propulsion block, right? And at some point Even we dealt with liquidity as well, right? Then at some point there was like a breakup block, right? This one here. I believe I reviewed this in January. That showed that price was reacting to this breakup block over here on the monthly, and so we did like a consult accumulation, manipulation, distribution. That's another concept that we've learned, AMD, right? All kinds of things. So since price is fractal, you see how what happens, or concepts that apply on one time frame will apply on another time frame. So firstly, you need to be at home with the concepts, and then you apply them in the right way, in the way you've learned. And with that, you should at least come up to a very much more clear understanding of price and what's likely to happen next, right? Or because that's like the whole premise of even analyzing essentially the higher time frames. What's next? That's always the question. What's next, right? So, but when you're doing short-term trading, levels, you look at candlesticks on the monthly, like looking at say the high, low, the candlestick like this one, which is the previous monthly high, previous monthly low. It's significant, truly. When you're short-term time frames, you're gonna see reactions. Definitely, you're gonna see some reactions, and you're gonna take advantage of that intraday. But there's not a lot to do on the monthly time frame. Although information that you get from there once you have done a bit of analysis is significant, so very significant. I mean, think about this. If you were looking to buy at exactly this price level, remember, because I said we're reading price. Let me show you right there. That's the price over there on the price chart, 338524.39. So you're looking to buy at this point, at this price right there, right here, and maybe right here. Your structure on the lower time frames should have given you setups that are in alignment with what you've seen on the monthly. The monthly says you should be looking for bullish opportunities right there at that price. So only when you have moved down onto like say your intraday charts or whatever, can you then incorporate time, right? That's when you see, for example, because power of 3 is something to do with time too. On this month here, power of 3 is in open, a manipulation, and a distribution higher, right? Open, manipulation, right? The price open when low. So below the opening price, you want to be a buyer. But where below the opening price? At a bullish order block. Okay, check at a bullish order block, but at what time? Right, that would be like the next thing. Although it's time and price, right? But currently here, what I'm dealing with is that when you're looking price on high time frame, or the kind of information you can only get on the high time frame has to do with price. Really, that's why I said only when you move on to a long time frames can you see time. Can you be more concerned with time? Can you put time into perspective, or can you put time or into your analysis? But on monthly and all that, all these high time frames, only thing you can probably get, or the only information you can really get, is price. Okay, imagine at what time did price actually tap into that price level right there. Okay, that's a step further, but that's not what we're dealing with here, right? So imagine price says we've taken out previous monthly high, failed to tap into the fair value gap. Even now, prices we've tapped into a monthly fair value gap below a significant liquidity pool here because this is a swing low, right? The swing low, even on the weekly, even on the daily. That's what price is telling us on the monthly. You take it low, you can retrace back inside the range. We can. If we see an expansion from the fair value gap, we could see expansion higher to premium levels in this range. But we're only gonna be have a clear range only if price creates like a swing low, right? So if you see well, we just begin a new month, right? Yeah, so we'll see. So this month is significant, really. So every month, now maybe this should be part of the daily discussion, but every month, remember, we do the monthly power of three. Incorporate that into your routine. Monthly power of three at the beginning of the month, somewhere in the middle of the month, and maybe a review at the end of the month. Monthly power of three, and that is the only thing you can get on. Actually, this is a discussion for the daily, but all I'm saying is this month opened 1st of May, went lower into a significant level, right? A key level, that's what we call it, right? And now it's pulling back inside the range. So depending on whether this candlestick closes, I mean this month closes below, I mean like inside this 50 gap or even below the 50 gap, we will only know in time. That's why we don't really for example, we don't change what we do on the monthly, right? If this is all I have on the monthly right now, this is all I have. I'm not gonna switch up, you know, my analysis or say if I have a bias, I'm not gonna switch up on it just because of what I see on the lower time frames, because they are not the ones who are determining what price is doing or what price is gonna go to next, but rather this right here, these high time frames are the ones who are influencing and giving structure to the lower time frames. Okay, with that said, now possibly maybe I did not discuss everything that I wanted to discuss right here, but I hope some few things that I emphasized have really reached home, because I really have a challenge with or the one challenge that I feel like I've been having is maybe having people who don't give this time frame or this high time frames as much significance as is needed. You really need to give it attention. You really do. It's for your benefit. You make you a very dangerous trader. Trust me on that.